Hi everyone, and thanks for watching this Excel with Finance video. In this video, we're going to figure out how to calculate your earned income tax credit. The graph you see in front of you is how earned income tax credit works as a function of your income. So tax credits, if you remember, are things that count against your taxes. And if your tax credits go zero, or if your tax credits cause your taxes to go below zero, well then you end up getting a refund or a cash payment from the government. But this is how earned income tax credit works. Earned income tax credit it's designed to be a supplement to income for lower income households, particularly lower income households with children. And so we can see on this graph, I actually plotted the earned income tax credit for someone who's filing married joint with one child. And so this is what happens is, so your income's on this bottom line, and the amount of your tax credit is on the vertical axis. And so you can see there's four ranges of earned income tax credit. In this first range, your earned income tax credit is just some percentage of your income. It actually turns out to be about 8% or 34% of your income. So up until you reach an income of $9,000, your earned income tax credit is going to be 34% of whatever your income is, up until you reach an income of $9,000, which is what's right there. Then for the next range, and at which point your earned income tax credit is going to be $3,373. Then for the next income range, your earned income tax credit is just flat. It's going to be whatever the maximum is. And so that's if your income is between $9,000 and $23,700 or $750. Your earned income tax credit is going to be flat. And then at this point, it starts to taper off. And it tapers off gradually until at an income of $44,800, your earned income tax credit is zero, and beyond that, your earned income tax credit is just zero thereafter. So when we compute earned income tax credit, and now these thresholds change. The maximum changes, the maximum amount of earned income tax credit changes, as well as each of these thresholds change depending on whether or not you're filing married joint or single head of household, and whether or not you have 0, 1, 2, or 3 or more children. And so if we go to our tax document, I went and pulled all these data. This is for 2016. These are the thresholds that are associated with each of the different categories. Now, as far as the IRS is concerned, married joint and is one group, and single head of household is a separate category is a separate category. So and so we can see that what I've labeled is the start of the neutral. This is where I'm calling so I have number of children, start of neutral, end of neutral, phase out, and then your maximum earned income tax credit. So on the graph, what it'll end up equaling is this point right here is the start of the neutral. That's where the amount of earned income tax credit is neutral to changes in your income. The end of the neutral is right here, and then the phase out is right here. And then the max earned income tax credit is just whatever the level is at this top area. So the first thing we need to do is we need to pull in 1, our income, and 2, our filing status from our very first sheet that has all of our information. So we need to do income and then filing type. And we're just going to pull this in from sheet 1. So our income is going to pull from right there, and our filing type is going to pull from right there. So now we've got our income and our filing type. We need to actually compute what our earned income tax credit is going to be for these various different situations. So the way I'm going to do that is I'm actually going to create a little graph over here. Sorry. The other thing we need is we're going to need the number of dependents under 17. So now we're gonna go this, and we're also gonna get the number of dependents under 17 from this table. Now I'm gonna go back. I'm gonna adjust the income because $100,000 is higher than any of these income thresholds. So just so we can kind of see what's going on, I'm gonna move this to $35,000, and I'm gonna do this married joint with, let's go with 2 kids. So if you're a married joint, 2 kids, $35,000, what's your earned income tax credit going to be? Well, we can see married joint with 2 kids is going to bring you here. It's going to take you this one. So your earned income tax credit is going to be somewhere in this phase out area where you end up getting some percentage of the maximum earned income tax credit. So the way we're going to do this is I'm just going to create a little table over here that has kids, married joint, or single / head of household. And then 0, 1, 2, these I do not want to be filled in, no fill. And then I want these to just be numbers. And so 0, 1, 2, and then I'm going to, whatever, 34, that's fine. So then what we're going to end up doing is we're going to use a VLOOKUP table that's going to find your kids. So it's going to basically say, this person has 2 kids, so it's going to pull from, so it's going to find number 2 in this column, right, or in this column right here, and then it's going to pull back either married joint if you're filing married joint, or single head of household, the number that's right here. So what we need to do is we need to calculate what your earned income tax credit is going to be if you're in these, if this is what your various situation is. So the way we're going to do this is we're going to do just use kind of a large nested if statement that just basically asks 4 consecutive questions. Question 1 is going to be in, I'm just actually I'm going to move this so that we can so you can always see. There we go. So question 1 asks, are you in kind of this this first phase right here? Question 2 asks, are you in the second phase? Question 3, are you in the third phase? Or question 4 is, are you in this last phase? And then it'll calculate your earned income tax credit accordingly. So this first one is for married joint with 0 kids. So all of our numbers are going to be coming from this top row. So we're going to ask the question, if income, and make sure I anchor on income, is less than or equal to the start of the neutral, make sure, and then I'm actually not going to anchor on that right now because we're going to drag this down. But that's going to say if your income is below here, then your earned income tax credit is going to be some fraction of your income. And what fraction of your income is it going to be? Well, it's going to be the max earned income tax credit divided by the start of the neutral. And that gives you, which is just this point right here, so it's the earned income tax credit divided by the start of your neutral will give you what percentage of your income is returned to you in earned income tax credit. So if that's the case, then it's going to be your income, make sure you anchor on that, multiplied by the max earned income tax credit divided by the start of the neutral. So that will calculate your earned income tax credit if you're in this first phase. Now the next thing we're going to say is we're going to ask the question, we're going to say if your income, make sure you anchor, is less than or equal to the end of the neutral, then it's just going to be the max earned income tax credit. And the reason why we don't have to specify anything else is because it's already asked this question. So if this question was true, then it's not the if statement's not even going to ask any further questions. So the only way for this statement to be true, the second if statement to be true, is if you're only in this range. So the next thing we need to know is if your income is in this taper out phase. And so if your income, so let's anchor on the income, and then is less than or equal to this phase out phase right here, then we need to figure out how much earned income tax credit you're going to get. And what you're going to end up receiving in earned income tax credit is some percent of the maximum earned income tax credit. Now that percent, the way you can calculate what percent you're going to do is basically by calculating what percent of the way you are between this end of the neutral and the phase out phase. If you're 100% of the way there, so if you're all the way at this phase out point, then you're going to get 0%. If you're 0% of the way there, so you're actually right here, you're going to get 100% of the income, and if you're somewhere in the middle, you'll get some fraction. Now the way we calculate that is what you're going to end up getting is the maximum earned income tax credit multiplied by the phase out minus your income, so make sure you anchor on that, divided by the phase out minus the end of the neutral. And that right there will compute, this right here will compute the fraction of the way you are between here and here, as that will give you the rate or the amount of the earned income tax credit that you end up getting to complete. And you can see right here in this top where it's your income or where it's the maximum minus your income, that if your income is equal to the maximum, then you're going to be right here, it's going to be exactly equal to 0. So now the last thing, the only option that remains is that you're beyond this. You're beyond this phase out point, in which case your earned income tax credit is going to be 0. So now we need to close all of these, and this will say, if this were your situation, if you're a married joint with 0, then if you're a married joint with 0, then you would end up having 0, because obviously 35,000 is beyond this phase out of 20,400. So now we can drag this down to all of these, and let's actually make all of these into numbers. Okay. All right, so now we can drag all these down, and we can see here. So now, if we're how it changed. So if we look at the formula, when we drag the formula down, your income stayed fixed to here, but but now it used all the thresholds for these higher numbers. And then now these are for 2, and these are for 3. Now everything beyond 3 is the same, and so I'm just going to do an equal to what's before you, and then just drag that down. So, I mean, I don't think anyone's going to have 34 dependents under 17, but I'm just making sure that the graph can do whatever it needs to do. So we can see if you're married joint, your earned income tax credit for each of these different scenarios is going to be, you can see what it's going to be. Now the last thing we need to do is we need to figure out what your earned income tax credit is going to be if you're a single head of household. So for that we do the exact same. For that we do the exact same formula, except we use these thresholds down here. So we're going to equals if your income is less than or equal to the start of the neutral, then give me your income multiplied by the max earned income tax credit divided by the start of the neutral. If not, you're going to say if your income, anchor on that, is less than or equal to the end of the neutral, then your tax credit is going to end up equaling simply the maximum earned income tax credit. And then next thing you say is if your income, make sure you anchor on that, is less than or equal to the phase out, we then need to just calculate the fraction of, then your earning of tax credit is going to be the maximum multiplied by the phase out minus your income divided by the phase out minus the end of the neutral. And if not, then it's going to be a 0. So this is the exact same formula, and then if we drag it down, we can see it does exactly what we want it to do, except we made a mistake. We forgot to anchor somewhere. One of our B3s we forgot to anchor because it is right here. Okay. So now when we drag this down, everything should fix. So everything's anchored. This stays where it's supposed to be. All these drag down, and then these are going to equal whatever's above it. So now the last thing that we need to do is we need to figure out what your earned income tax credit is. So what we're going to use is we're going to say your earned income tax credit. What we're going to do is we're going to use a VLOOKUP with an if statement. So we're going to say equals VLOOKUP, and the lookup value is 2. And so that's the number of dependents that you have, and we want to look up number 2. So in here, in this, we want to pull whatever's here in this case, and so that's our table, and then the column index. So here's where we put our if statement. What we're going to say is we're going to say if your filing status equals married joint, then you're going to pull from the second column. Then give me a 2. If not, give me a 3. Because if you're not filing married joint, you're either single or head of household, and therefore you're going to be pulling from this third column. And then last is we're going to put false, and then this will give us our earned income tax credit for this particular person who, I should say your, for this particular person. So now we're just going to go back to this first stage, and we are going to put right here earned income tax credit, and we're going to link that to this page right here, and we're just going to pull in our earned income tax credit. So we can see that in this situation, this person's earned income tax credit is equal to exactly $3,198. Thanks for watching. Join us next time, and we are going to work on some other tax credits that you can get.